This video is going to give us a bit of an overview into this objective of profitability. So in terms of this objective, there's three things we need to know. First of all, we need to know what the objective is. Secondly, how it's measured. And thirdly, how can we improve it? So we know that profitability is all about maximizing returns from business activities. It's about increasing the difference between our revenue and expenses. Now, there are a number of different ways that we can measure how well we are going in this objective, and we are going to use three different ratios to do that. Once we've calculated those ratios, we're going to conduct comparative ratio analysis. So that means comparing our results in those ratios to other figures to make a judgment about how well the business is going. Then if those ratios indicate we've got a problem with our profitability, we can implement some strategies, specifically revenue controls or cost controls, to improve our profitability. So let's recap our objective of profitability. We know that it's a key long-term financial objective. We know that it's about increasing the difference between our revenue and expenses. And finally, it's an incredibly important objective because we need to achieve a profit to be able to continue business operations, to be able to pay our bills, to remain solvent in the longer term, as well as continue the business to be an attractive investment opportunity for its owners. So how can we measure the profitability? What we're really looking for is a way of looking at how much the business is generating in terms of its profit. So how much are we getting as gross and net profit out of each dollar of sales, and how much is the owner receiving from their funds invested in the business? So there are three ratios that we are going to calculate. We're going to look at a gross profit ratio, the net profit ratio, and the return on equity. Now the HSC is going to give you the formulas for all three of these ratios. The trick, however, comes is they will not tell you how to calculate gross and net profit. So you need to go back to the video on income statements if you're a little unclear on that. When we're making a judgment about if a business has good or poor profitability, what we're going to do is we're going to compare those results that we had in those ratios to various figures. It could be our results from last year, so has our profitability got better or worse? It could be to the profitability ratios of other businesses, whether they be industry leaders or key competitors. And finally, we could compare our results to industry averages. Now, the rule of thumb, the thing to really be aware of is with profitability, the higher the ratio, the better. We want our business to have more profit levels than they did last year. We want to generate higher profit levels than other businesses or than the industry average. So in terms of improving profitability, if we've had a look and we've calculated those ratios, we've compared them to industry averages, previous results, we might need to implement strategies to increase this difference between revenue and expenses, because we find that our profitability levels aren't where we would like them to be. Now, why could we have a profitability problem? Well, the net profit formula gives us the answer. So we know that net profit is what the business generates after all expenses have been paid. So we know that it's going to be sales minus COGS minus other expenses. So if we've got a profitability problem, it's going to be an issue with one of these three components. Our sales might be too low because marketing isn't generating the awareness, or we're offering the wrong product mix, or our prices aren't sustainable to generate profits. It could be a problem with COGS. Our COGS could be too high, so our input prices are too high, or our other expenses are too high. And that means we're spending too much money on running various parts of the business. So how can we improve our profitability? Remember, it's all about Bob the Builder. We're going to implement strategies. Now, the strategies could be about increasing revenue or decreasing costs. So make sure you now move on to the videos related to calculating and interpreting the ratios.